rose a little bit and then had that sell off, which brought it quite a bit lower below 2,600, and obviously some volatility and has been choppy since then. But well, hello there, my friends. Chris Marcus here with you for Arcadia Economics. And in today's show, which I'm recording just after noon on Tuesday, December 10th, we are going to dig into how the gold and silver prices, which had a big rally on Monday, gold continuing that rally today. And now we've basically put that post-election sell-off in the rearview mirror. And we will take a look at that as well as a few of the other important news items that have come out recently. But first of all, here we see gold up $33 on the day, futures back above 2,700, as you can see. Taking a look back, here we have the 5th. So we see, and if you remember, it wasn't really until after Trump was declared the winner. So as you can see, there's the price about the $2,700 mark, and rose a little bit and then had that sell off, which brought it quite a bit lower below 2,600, and obviously some volatility and has been choppy since then. But again, the markets are obviously always going to react to the short-term news in there as well. Although, as we'll touch on in just a moment when we pull up the dollar chart, at least reason to suspect, along with when you think out some of the longer-term implications of some of the policies, that perhaps this move might play out similarly to what happened the first time Trump was elected back in 2016. And we'll get to that in just a moment. But first, a look at the silver chart. And here, let us go back. There is November 5th. And you can see, even depending on which day you mark it by, there's on the 6th, and we are higher in the silver price. Now, certainly what has helped the rally in the past couple of days, we'll skip the 10-year, or before we get to what helped the rally in the past couple of days, here is the 10-year. And again, you can see yields quite a bit higher than the Fed's September meeting, which is down here about 3.7%. So still 52 basis points higher has come in since then, along with the dollar index, which I kept saying I was going to mention. And here we will do that, because if we go back to the 3-year or 3-month chart rather, and we can see here is that September Fed meeting, when Jerome Powell, after staying put in the previous July meeting, decided he needed to do 50 basis points rather than 25, while saying and continuing to say that the economy is strong. Either case, there you had right at par, got below par, and had this rally that went up to high 107.68. So 7% in, what do we call that, 2 months, almost 3 months. Well, I guess at the point that it happened, here is 2 months. So in a 7.5% rally in the dollar index, which, again, I'll give that reminder. Keep in mind this is the dollar against other currencies that are managed similarly to the dollar. If you think that you're going to be seeing general pricing level as this dollar rallies, that's probably not quite as likely. And certainly if you think out 5 or 10 years, we won't go into that today, but I think you get the point. So keep that in mind when you're hearing that. Obviously, the dollar index has come in a bit since then, was below the 106 level. I believe that was yesterday, also last week. But anyway, so has come in from the peak a bit. And as I believe I've mentioned before, but if we go back to 2016, dollar was at 95 earlier in the summer of 2016, rallied into the election, eventually got over 103 by January, before 2 years later, dollar index was under 90. So keep that in mind. Perhaps more impact and correlation to the gold and silver pricing than it should, but either case, that is how that goes. And just interesting, though, that, and this is before we've really seen full clarity on some of the policies that I would suggest are going to grow deficits, which ultimately will put more pressure on the dollar. Not that the euro, yen, or pound are not going to have those issues, but I continue to wonder as more clarity comes out, some of which is coming out already, and we'll touch on in just a moment. But April, May, June of next year, I wonder if Wall Street and the investment world is seeing the dollar reaction to some of these policies a little differently than they are today. But we'll check back then. In either case, this came out a couple of weeks ago that was China's dollar bond sale. And one note I just wanted to mention that pretty interesting here. See that the bond was so oversubscribed that it drove yields to as little as 1 basis point over what the US Treasury pays. And there was a great tweet here. I'm going to put this into the description field below. I won't go through the whole thing here, but Arnaud Bertrand had the same thought, and we'll read this part where he mentions second interesting aspect is that the interest rates on the bonds was remarkably close to U.S. Treasury rates, just 1 to 3 basis points higher, which means that China is now able to borrow money in U.S. dollars at virtually the same rate as the U.S. government itself. That's the case for no other country in the world. As a benchmark, countries with the highest credit ratings, AAA. Remember that the U.S., I think it's only Moody's that still has the AAA, and they've put the U.S. on watch. So other countries that have the AAA typically pay at least 10 to 20 basis points over treasuries in the rare instances when they issue US dollar denominated bonds. So if you'd like a full write-up, again, that is in the description field below. And certainly because in the past couple of days, we've had a lot of China news. Obviously, Chinese central bank reported that they were adding gold again in their latest data. Now, again, I will not get into it today, but Jan Nieuwenhuis has done some great research showing that it was more likely than not that they were adding gold through other means that was not being reported, even during the 6-month hiatus. Keep in mind, they had reported the PBOC adding gold 18 months in a row before you had the 6-month hiatus, where they may have been buying gold in the background, and then now they are reporting buying gold again. So just keep in mind, and that's one of the perhaps challenging parts of gold and silver, is that is a lot of unknown, and sometimes you have to sift through the clues. And wish I could give you an exact answer, but at least I will point out some of the things to watch out for. So, oh, and yes, fortunately, I had this up here from the Substack column I wrote on Friday, and here was a note from Jan. Mentions the final clue is that there's a relationship between what the Chinese central bank officially reports to be accumulating and gold exports from UK to China. What frequently happens, exposed by comparing these numbers, is that the PBOC starts buying gold a few months before it tells the world about it and severely underreports its additions. And so here you can see that in the gold bars is the official reported additions. And here you can see each time it looked like there were inflows coming to China that were not being reported, and then you get the additions. Does that guarantee that's what they're doing this time? No, although if you look at his Substack, which you can find under Jan Nieuwenhuis, and he also writes for Monetary Metals too, so some great articles that I would say are worth checking out. And certainly that's had its impact. Obviously, the Syrian news over the weekend had an impact as well in driving the prices on Monday. And also on Monday, another thing that came out was news from Chinese leadership where their Politburo signaled a move towards moderately loose monetary stance. And as Goldman Sachs noted, specifically, policymakers vowed to implement a more proactive fiscal policy and moderately loose monetary policy. Also coming out on Sunday, December 8th, China consumer inflation rate drops to a 5-month low. So not surprising to see that they're talking about a lot of stimulus. And I know some people have been disappointed by the amount of stimulus so far. Obviously, I don't think we're done there. So keep that in mind. And next, I am going to play a quick clip from a great Luke Groman interview, which you highly recommended checking out the whole thing on Natalie Brunel's channel. And I've mentioned Luke. I'm a big fan, and he has talked in many of his videos and his newsletter, also highly recommended, about how you can do the cost cutting, and that would be good in one sense, but you need to make some adjustments first. He says specifically that you're going to have to do a recapitalization of the system, of which one of the means could be through a revaluation of the gold price. In this particular case, he was getting at Bitcoin, but I think what he points out here is still quite fascinating and worth being aware of. So let's play a little snippet here.
If we go back in time to late 73, early 74, oil rose in price by 400% from October 73 to April 74. And there is an interview that was given on CNN International by the former Saudi oil minister, Sheikh Yamani, in 2010, in which he said there was a meeting of Bilderberg Group at this Swedish island in late 73, October 73. Henry Kissinger attended and said, look, the price of oil is going up 400%. Get on board. And it happened. And again, these are not my words. These are the words of the former Saudi oil minister on CNN 14 years ago.
Which I thought was, on one hand, just interesting, but certainly when we look back in history and see the way some of these things are negotiated, I could sit here and talk about how great I think free markets are all day long. Are we ever going to get a purely free market? No, probably not. And that's why I think that comment is rather insightful, especially because let us play this note from new Treasury Secretary, or soon to be, Scott Bessent.
I feel very strongly that this is the last chance to grow our way out of this. I also felt very strongly that we're in the midst of a great realignment, and of a Bretton Woods realignments coming in terms of global policy, global trade. There's a lot of what I taught at Yale. I've been studying my whole life. I'd like to be part of it, either on the inside or the out. And then 3, I think that this new Republican Party that's been reconstituted with these new constituencies is the party of the future. It's a melding of working class and business class people. I'm determined that these new I also felt very strongly that we're in the midst of a great realignment, and of a Bretton Woods realignments coming.
So now we're hearing about a Bretton Woods style realignment from the man who's going to be the Treasury Secretary at a time where, it seems like something in that nature is, I don't know if need is the right word, going to be forced upon the world. We'll see how it goes. But meanwhile, in Texas, here, they're proposing gold and silver-backed currencies to compete with fiat money. Texas lawmaker has filed 2 bills that, if passed, would create gold and silver-backed transactional currencies backed 100% by the underlying asset that would serve as legal tender in the state. So, won't dig into the BRICS today. Do have some thoughts, and I know maybe there's been some air out of the balloon following the BRICS summit back in October, just about 2 months ago. We'll have some more comments about that another day, but again, same thing the BRICS say. You're hearing from the states and Texas looking at another step forward. So either case, that is the gold and silver news today. I hope you are enjoying the gold rally. And real quick, before we wrap up, I did want to pass along that First Majestic Silver, who announced that deal with Gatos Silver a couple months back, and they did announce that their registration statement on Form F4 is now effective, which is one of the conditions of the closing of that deal. And there will be a meeting for First Majestic shareholders on Tuesday, January 14th, 2025, to vote on the conditions for that deal. And perhaps just wrapping up, I did talk with Keith Neumeyer about his thoughts on the deal about a month or 2 ago, and the link to that interview is going to come your way now. So if you want to find out more about why they did that and what they're looking at, well, just click on this video that's coming your way now.